let me be absolutely clear about what has just happened. Because if you're holding the Iraqi Dinar, or have been following this saga for years, what I'm about to tell you will sound like a fantasy pulled from the deepest corners of a speculative internet forum. But I am telling you, as of this moment, it is no longer speculation. It is public, verified, and official financial reality. The single greatest barrier to the Iraqi dinar's revaluation, the thing that has kept it artificially dormant and trading at a fraction of its potential, has just been systematically dismantled by the Central Bank of Iraq in a coordinated move with the International Monetary Fund, and the official statement, buried in the financial section of a major news wire but now exploding across all serious economic analysis circles, confirms the complete abolition of the currency's program exchange rate. For decades, the value you saw for the dinar was not a real price discovered by the global market. It was a number set by the government, a controlled, artificial peg designed to maintain stability in a post-war economy. But that stability came at a massive cost, effectively locking the currency in a cage and preventing it from reflecting the true, staggering economic potential of a nation sitting on one of the world's largest reservoirs of oil. That cage door is now open. The official transition to a market-based floating exchange rate is not a minor policy tweak. It is the foundational seismic event, the very first domino that had to fall for everything that follows to even be possible. And its immediate effect has been a controlled but undeniable surge in the currency's value on international forex markets. A surge that analysts are calling not a spike, but a fundamental correction. Think of it like this. For years, you were looking at a price tag on a priceless painting that was placed there by the museum's accountant, not by an auction house. Today, that painting has been taken off the wall, placed into a global auction, and the opening bids are already revealing its true multi-million-dollar worth. This is precisely what is happening with the dinar right now. The initial rate adjustment, which we are seeing fluctuate between a 20 to 30% increase against the US dollar in early trading, is not the final RV number that has been the subject of so much hype. This is the market merely tasting the newfound freedom of the currency, testing its weight now that the artificial anchors have been cut. This is the crucial first step in the step-by-step process, and it is the most important one to understand because it shifts the entire narrative from if to when and how high. The central bank's statement explicitly outlines a phased approach, where this initial float allows the currency to find a natural equilibrium, absorbing pent-up demand and recalibrating itself based on Iraq's actual economic output, which, let's be very clear, is substantial. We are talking about a country with a GDP pushing over $300 billion, with oil production consistently exceeding 4 million barrels per day, and with a government finally pushing through the financial reforms demanded by the international community for years. This isn't a miracle, it's a macroeconomic inevitability finally coming to pass. The removal of the program rate is the key being turned in the ignition of a financial engine that has been dormant for a generation, and the initial rumble you're hearing is the value of every single dinar note you hold, beginning to recalibrate to its legitimate position in the global financial order. This means that the certificates and currency you have in your possession are, at this very moment, undergoing a fundamental transformation from being simple pieces of paper representing a struggling economy to becoming legitimate financial instruments representing a share in one of the most resource-rich nations on Earth. The first step is complete, and the journey towards a full and final revaluation is now undeniably, publicly, and officially underway. Now, with the initial shockwave of the float reverberating through the markets, the entire financial ecosystem surrounding the dinar is entering its most critical and volatile phase, a period of intense price discovery where the true, long-term value of the currency is being forged in real time. And this is precisely where most speculative investors get nervous and make costly mistakes, because they fail to understand the mechanics behind the curtain. The second step in this meticulously orchestrated process, and arguably the one that will determine the ultimate ceiling for the dinar's value, is the active and aggressive intervention by the Central Bank of Iraq to manage this newfound volatility, not to suppress the value as before, but to guide its ascent towards a stable and sustainable peak. Think of the currency now as a rocket that has achieved initial launch. The powerful, uncontrolled burst of the initial float was necessary to break gravity's pull, but now, precision guidance systems must engage to ensure it reaches the correct orbit without tearing itself apart. This guidance comes in the form of strategic foreign currency auctions and the deliberate tightening of money supply within Iraq's domestic economy. You see, a sudden 1,000% surge in value, while thrilling to imagine, would be catastrophic for the local population. It would make Iraqi exports prohibitively expensive and cripple the non-oil sectors of the economy overnight. Therefore, the central bank is now acting as the ultimate market moderator, using its vast reserves of US dollars, a war chest built up over years of oil revenue, to strategically sell dollars and buy dinars whenever the appreciation rate becomes too rapid, effectively placing a temporary speed bump on the road to revaluation to ensure a smooth and controlled journey. Simultaneously, they are initiating a large-scale project to retire the massive quantities of lower-denomination dinar notes still in circulation, a process often referred to as a liquidity soak, which is a technical term for fundamentally increasing the scarcity and therefore the inherent value of each remaining unit. This is not a secretive operation. It's being reported in Iraqi financial bulletins as a necessary measure to combat inflation and modernize the monetary system. But for the global investor, it has a much more profound meaning. It is a deliberate, calculated strengthening of the currency's backbone. Every billion dinar note taken out of circulation and destroyed increases the purchasing power of every billion dinar note you hold in your possession. This process directly counters the primary argument of skeptics who have long claimed the dinar is too plentiful to ever hold significant value. That argument is now being systematically dismantled note by note. Furthermore, this phase is being supercharged by the tangible, on-the-ground economic developments within Iraq itself, particularly the closing of the final chapters on international Chapter 7 sanctions and the full integration of the Iraqi national banking system with the international SWIFT network, which means money can now move in and out of the country with a level of ease and transparency that was impossible just a few years ago. This global reintegration is sending a powerful signal to institutional investors and sovereign wealth funds that Iraq is finally open for legitimate business. Not just oil speculation, and this influx of smart money is providing a solid, credible foundation of demand that supports the currency's new price levels. The data doesn't lie. We are already seeing a significant uptick in electronic dinar purchases through major international forex platforms. And the bid-ask spreads, which were once astronomically wide due to low liquidity and high risk, are now tightening dramatically, a classic technical indicator of a maturing and legitimizing market. So, while the daily price charts may show some fluctuations and minor pullbacks, which are perfectly normal and healthy in any new market, the underlying trend is unambiguously and powerfully upward, driven not by hype, but by the concrete, data verifiable actions of a central bank steering its national currency towards a predetermined destination of stability and global respect. This entire second phase is the messy, complex, and absolutely essential work of building a durable financial bridge between the old, artificial rate and the new, market-driven reality, ensuring that when the final rate is locked in, it is built on a foundation of granite, not sand. So, we arrive at the ultimate question. The moment that every person who has ever held a dinar note has been waiting for. What does the final landscape look like after this historic revaluation? And more importantly, what do you, as an investor, need to do right now to navigate the most critical 72 hours of this entire process? The final step in this breakdown is not a single event, but a convergence. The point where the controlled float and the strategic market interventions crystallize into a new, permanent global exchange rate, a number that will be broadcast by every major financial news outlet from Bloomberg to Reuters, and this is where your preparation meets your opportunity. The insider information and analysis from financial institutions with direct exposure to the Central Bank of Iraq's planning suggest that the target is not a single, magical number, but rather a stable bandwidth. a trading range that acknowledges the currency will now have minor fluctuations like any other major world currency. But the key takeaway is that this range is projected to be multiples higher than the previous program rate, fundamentally altering the financial standing of anyone holding the asset. This is not about becoming an overnight millionaire from a single $25 investment. That is a dangerous and unrealistic fantasy. This is about a legitimate, historic currency recalibration event, similar in nature to the Kuwaiti dinar revaluation after the Gulf War, where a currency was systematically restored to its pre-crisis glory and beyond. And for Iraq, that means a valuation that truly reflects its immense oil wealth, its strategic geopolitical position, and its future economic potential. The practical implications for you are immediate and profound. The first window to exchange your dinars will open through a specific, tiered process starting with primary banking partners in the Middle East, followed by a rollout to major international banks and designated foreign currency exchange offices. And the absolute most critical factor determining your success will be the speed and accuracy of your information. You must have a clear, pre-vetted plan for which financial institution you will use, understanding that the initial demand will be immense and potentially overwhelming for systems not prepared for such a historic volume of transactions. This is the moment where the years of patience either pay off or are squandered by last-minute hesitation and confusion. Furthermore, you must be psychologically prepared for the new reality of being in possession of a significant liquid asset. This means considering your long-term strategy for that capital, whether it involves reinvesting in a now stable Iraq, diversifying into other emerging markets, or securing your personal financial future. The global financial system itself is taking note, as a successfully revalued Iraqi dinar introduces a powerful new petro-currency into the international mix, one that is not pegged to the US dollar, thereby subtly beginning to reshape the dynamics of global oil trade and offering other resource-rich nations a potential blueprint for asserting their own monetary sovereignty. This is bigger than any single investor. This is a nation reclaiming its financial destiny on the world stage, and you have a front-row seat with a vested interest in the outcome. The information flow from this point forward will be rapid, chaotic, and filled with both official statements and dangerous misinformation, which is why your vigilance and source selection are paramount. Do not get swept away by the euphoria or the fear. Anchor yourself in the verified data from the Central Bank of Iraq and the IMF, the only sources that truly matter now. The historic wait is over. The revaluation is public and in motion. The final step is yours to take. This is the defining financial story of the decade, and you are now a part of it. Do not let this moment pass you by. If you want to ensure you have the most current, accurate, and step-by-step guidance on what to do next, including the list of pre-vetted international banks already preparing for dinar exchanges and the exact documents you will need to have ready, you need to stay connected with this channel. Hit that subscribe button and turn on notifications right now, because in the coming hours, I will be releasing a crucial follow-up video with the exact, actionable blueprint you need to navigate the exchange process smoothly and securely. This is your future, your opportunity. Take control of it by ensuring you have the right information at the right time. Subscribe now, and let's finish this journey together.